Hello, guys. Welcome to my show, Stock Analysis Simplified. Today, our focus will be on a company that is called Walmart. I'm sure all of you know Walmart. It's a very popular company in America, and actually, it's a multinational corporation because there are Walmart in other countries as well. Remember, in this analysis, my goal will always remain the same, which is to show you the right stocks to put your money in so that you can make money, can increase your money. So again, it is boiled down to helping you get rich. But remember, this is not a get rich quick strategy. It takes time. You choose the right company, buy the stock, hold it for at least 2 to 5 years, then sell it to make the capital gain. So it takes time to build it, just like it takes time to plant a seed and allow it to grow. But the bottom line is that if you follow my strategy, you're gonna get rich eventually. Not to me immediately, but as time goes on, you'll be financially buoyant. Okay? Your pocket will be filled with money eventually. So let's hit the nail on the head, as they say. Now, Walmart, as you know, was founded in 1962 by the Walton brothers, okay? And headquartered in the Bentonville, sorry, my mistake, Arkansas, Bentonville, Arkansas, okay? Now, the company is a global retail giant with hypermarkets, discount stores, and grocery stores, primarily in the United States. However, we have them in other countries too, as well. So as of 2022, Walmart operates about more than 10,000 stores in 24 countries. Okay, under various names. Okay, so now the largest company by revenue globally, Walmart, yes, of course, by revenue, Walmart is the largest company globally. I mean, as of that time. And it's also the biggest private employer with 2.2 million employees. So in a way, one can say that Walmart, in a way, dominates the US retail markets. Anyway, at least you have the background now. Let's look at what we're going to be doing in this analysis of Walmart. Again, an analysis will be based on some of the information we found in the balance sheet, the income statement, cash flow statement, and of course, some information about the stock itself. So we can now begin by, as usually, I like to start by looking at the company's moving average. Okay, so let us go to the place where we can find information, that kind of information free of charge, which is in Yahoo Finance. So I'm going to open Yahoo Finance so we can go there and then find what I'm looking for. Okay. Now, give me 1 minute. Let me make sure that you are seeing all this. Okay, good. I think we are seeing it. Right. So Walmart, the symbol is WMT. I can see that it pops out. Okay, let me first of all look at the let me first of all look at the 200-day moving average. Because like I said, this is for long-term investors. So I'm going to look at the chart from Walmart's chart. Okay. So that we can look at the 200-day moving average. Oh, it's already there. Okay. You can see the moving average right here. And I can see that between 2020 to current year, See, this is the moving average right here, this line, and it's trending up for Walmart. And this is the stock movement for Walmart. And you can see that the stock is trading above, see, above the moving average. Okay, that is a bullish signal, and it shows. Now, let me say this. The simplest way to explain this is that because Walmart stock is trading above its 200-day moving average. Okay, it suggests that a general, it suggests a general upward trend in the stock price over the past several years. So for every stock, this is often interpreted as a bullish signal, by long-term investors especially, and it indicates that the stock may be in a sustained upward trend. Okay, so you can see them all this from here. See upward trend, sustained upward trend. Okay. Another thing is this. Walmart paid, you can see the D's. That means dividends. Okay. You can see the D's, they mean dividends. So Walmart pays dividends. That's one of the ways of finding a good stock. Of recognizing a good stock. If it is when a company makes money that it pays you dividends, because after all, dividend is a share of the profit. Okay. Now, he paid in 2019, he paid 17 cents, approximately 17 cents. And it's constant. 2020, 18 cents. So it's just, it's good. But then, like I said, it is not the moving average doesn't tell us, the chart doesn't tell us all the complete picture about the company. So we're going to dig deeper for Walmart to see what other information I can get from. Yeah, so to do that, I'll be clicking on the statistics of the company. Okay. The company statistics, looking at the first thing I'm going to look at is the profitability. The profit margin is 2.3%, 39%, and the operating margin is 4.18%. So what does this mean? It indicates that the Walmart made a profit of $2.39 for this one. It means that they make a profit of $2.39 for every $100 in sales. That's what it means, this profit margin. For every $100 in sales, they make $2.39. Now, while this is not high, it is typical for retail industries, where margins are generally low. Okay. Now, our operating margin of 4.18% for Walmart suggests that Walmart efficiently manages its operational costs because it earned $4.18 for every $100 in sales before interest and taxes. Okay. Now, at this point, we are ready to look at the management effectiveness, under which we'll be looking at the return on assets and the return on equity. Now, let's look at the return on assets. It is 6.81%, which shows that it shows how profitable Walmart is relative to its total assets. Okay. And indicate effective use of assets to generate earnings. Since is positive. The return on equity is 18.64%. Is a high percentage and suggests that Walmart is effective in generating income from new investments. So far, so good. So far, so good. Okay, let's see. Let's look at the income statements. Not everything, just a few things that we need. The first one is the revenue, $648.13 billion. The substantial revenue figure showing the vast scale of Walmart's operations. And the quarterly revenue growth, you can see right here, of 5.7% also indicate healthy growth, which is a positive sign for long-term investors. Net income, a fancy name for net profit is 15.51 billion. And diluted earning per share is $1.91, so 1.91, which shows that Walmart has a healthy profitability and earning per share. Not bad. Then quarterly earnings growth rate is negative 12.4%. And this negative sign is concerning. A decline in quarterly earnings could be a point of concern, but it should be considered in a broader context. So far, it just does only the item that looks bad so far. Now we're going to go over to the EBITDA. For what the EBITDA, which means earning before interest and taxes, depreciation and amortization. So it is 38.686 billion. Well, in plain terms, this demonstrates that Walmart earnings before interest, taxes, depreciation, and amortization is, I would say it's strong. I mean, this is a strong core profitability. Anyway, looking at the balance sheet now, total cash is 9.87 billion and total debt is 1.32 billion. The debt is concerning, of course. I mean, Walmart has more debt than cash. That's the way to put it. More debt than the cash, but this is a common in large corporation. However, it requires careful debt management. Now, so total debt to equity is 67.70%, indicating a moderate level of debt relative to equity. But one thing that is concerning should be the current ratio of 0.83%, which means that for each dollar of debt, they have only 83 cents to satisfy it. Meaning that if they have $1 billion, meaning that if they have $1 billion in debt, they have only 830 million to pay it. So that is concerning. Yeah, it's concerning, of course. Now we have that. Okay, let's look at the cash flow statements, which is right here. So operating cash flow is 37.73 billion, and the lever free cash flow is 6.76 billion. Well, strong cash flow indicates good liquidity and the ability to fund operation, investments, and debt management. So overall, when you look at all this thing that we have examined here, you will see that apart from this, the area that we need to watch, which is things like the current ratio, which is right here, okay, and the high debt level. You can see the total debt. Apart from these two, I would say that Walmart is actually it have a healthy revenue growth. They have substantial net income and a strong return on equity. So, which means that it is a stable company. Not only that, its dominance in the retail sector and the consistent performance could make it a stable investment. In fact, make it a stable investment for long-term investors. So, in general, I would say that Walmart has financial health appears to be robust, with strong revenue, effective management, and very good profitability metrics. So what will be our final conclusion about this company? Well, for me, I would say that, should you buy Walmart stock and hold, or should you not? I would say the answer is buy. Buy the stock, hold it 2-3 years. I will say 5 years. Don't worry about what the market is doing. Focus on the company. The value will appreciate, because people like Walmart. People buy from Walmart and they have a large footprint in the retail sector. So, and from what you have seen, the fundamentals have told us that it's a good company. So why not? You need to get a piece of the action in the markets. And if you want to do that, Walmart is one of the companies you need to buy and hold. Thank you for listening, and I will see you in my next lecture. Have a good day. Bye-bye.